Heading into the beginning of the year, thinking about buying a house is a great time to pause, reflect, and plan so that when you get there, you close successfully and feel good about the process you went through. Stick around. We're going to talk through 7 items that you can think to do and that are actionable steps so that when you go to write that contract, you are feeling good about the house you will close on. We all have holes in our bucket. So I'm going to look at maybe the last 60 to 90 days of expenses. Understand, are there subscriptions I can cancel? Because that money can help you understand your overall financial health. And look at your income. What are the projections? Do you think you'll be getting a raise? Do you think it's going to be flat? Are there bonuses that you expect to use to save towards a down payment? Are there debts you can tackle really quickly? Or should you tackle those debts or wait to pay those off depending on the outcome of talking to a lender? Number 2, set your goals. Understand your budget. Look into how much is going to be comfortable for you to spend per month. If you're spending X in rent, does that mean that you can spend that much when you buy a house? It really depends on the housing market you're in and how much you're spending in rent. There are odds that the mortgage payment might be more than rent, but we know that there are considerations. But I would say talk to a lender early, because at this point, you're not seeking what are your rates, okay? If I'm talking to a lender early in the process, months ahead of when I'm going to buy a home, I want to get educated. I want to understand my capacity, how much I can afford. Maybe get some ideas on budgeting, some ideas on savings for a down payment, what loan programs are going to be available and best suited for me. But talk to a lender early, not to shop rates, because it doesn't matter right now. You're not going under contract in this moment, but to find someone that you trust and value their opinion so they can help you along the path and the journey. Number 3, the score tune-up. You're already at a 780 and it's not necessary. Just stay the course. But if you're sitting around a 680, then I can promise you there are things you can do. And it might be as simple as changing when you make payments to the credit cards, meaning if you pay everything off, but you charge up to the limit, and you pay it off, well, at that point in time, if the statement cycle has already closed, it can be too late and your score is already reported. But here's the good news. Credit scores, they have no memory. What does that mean? If my payment is taken on the 13th of every month and I do charge my card pretty close to the limit, all I'm going to do is maybe move it up. Maybe that first month is uncomfortable, but I'm going to move it up. Maybe I'm going to move it up to the 3rd of the month. What does that do for me? Well, then there's only 10 days of charges. I just gamified credit scoring by not changing how much I spend, rather when I make the payment on their credit card. So that's one actionable item you can do for a credit score tune-up, but get a copy. You can get a copy from each of the bureaus once per year for free credit report per year from each of the credit bureaus, and do look them over. So maybe you just start with TransUnion, then get Experian, then Equifax, 3 months apart from each of the other so that you can understand what's going on there. Number 4, understand your strategy for your down payment and your closing costs. Now, in this current market, you want to understand if you think you'll be able to get the seller to pay the closing costs or if you're going to have to pay them. It really depends on the competitiveness of the market you're in, location where you're buying, and the type of home you're buying. You may very well be able to get seller concessions to pay the closing costs. Be prepared to have that budget for the down payment and the closing costs. So have a strategy for that. And that's where talking to that lender early could really be helpful for you. Number 5, if you do that credit score tune-up and feel like there are debts you need to reduce, does it make sense to pay them off? Well, if your score is a 640, maybe getting it higher to open the door to a better conventional option or a conventional option versus an FHA could make sense. But having the debt reduction plan might also be that the lender advises you, don't pay these off, rather set the money aside in your savings. And if action needs to happen for your debt ratios to qualify for that home of your dreams, then you can pay them off, and lenders have what are called a courtesy payoff. What does that mean? Courtesy payoff is simply when you would be able to bring that money in addition to your down payment and closing costs to closing to qualify. That might be a car loan that you're thinking to pay off. But again, have the lender discuss with you, do you need to pay off these debts, or should you just be prepared and have the money set aside? Or is it not necessary because you'll qualify, you can afford it, and your credit score is good enough? But understand your debt reduction plan. Number 6, getting pre-approved. Getting pre-approved again. What does that mean? Well, if I talk to that lender early on, they can pre-approve me. But bear in mind, those financial documents have a shelf life. So what does that mean? It is 120 days. But when we get to the 90-ish day mark, underwriters are going to start asking for updated items if you go under contract. So make sure to have that communication with the lender. Don't change jobs. If you have a beautiful opportunity, talk to the lender in advance to see if that's going to affect your ability to close on the home. But as far as it goes about getting pre-approved again, it might just mean sending over, the new pay stub, maybe the W-2, because now the W-2 is available, the bank statements, etc. Usually when we pre-approve people, it kind of comes down to just like stay par for the course. Don't go out and finance a new car. If you need to make a change with the vehicle, change with the job, etc., consult with a lender so that you're going to be safe and don't get a surprise at the time that you've already planned to give notice on your lease to move out and find out no longer that plan works for you. And the last thing is get market outlooks. Now, I would say with this, you want to do it early, but you want to revisit it. And we have videos on the channel about expectations and plans for the market. I would just say, if someone were to say, Ray, just give me simple math. What is the expectation for the year ahead with interest rates and home prices? I would say, truthfully, I've said it for a long time, there is a shortage of supply. Does that mean that prices can ebb and flow, that prices can't pull back? Of course they can, but there is also seasonality. If you're buying at the end of the year and saying prices are pulling back, well, there just so happen to be less homes on the market because less people put their house for sale on the end of the year. That is a known fact in the community between realtors and lenders, that there are just less homes. You'll see it if you look online at the end of the year as well. So get market outlooks, have a lender or your agent look up what is the activity in the area that you're looking for, because that might give you an inclination on your ability to negotiate price, negotiate closing costs, and other things that might matter to you. Or are you going to have to come guns a-blazing because it's a hot market or a hot home? Be prepared. If it's a hot market and a hot home, be prepared for that pre-approval. Subscribe and like. Content like this will drop in your inbox. And please add comments below or questions about your thoughts related to getting prepared to buy a house in the future.